Hello, and welcome to the next in our series on reflections on investing. And today we're going to address the question of whether the stock market is too high. It's a question on a lot of people's minds, and the basic valuation equation that we've been working with can be helpful in that regard. So, let's remember what that is. It says that P, the current price, is the present value of the cash flows produced by the investment. And the investment we're going to be looking at today is the entire market as given by the S&P 500. And then we discount those to present value at this discount rate K. And that discount rate, recall, has two parts. The risk-free rate of interest on long-term treasury bonds. And right now, as we're recording this, that's about 1.6%. Plus the risk premium. Now notice, if we know what these C's are, then the only unknown variables here are P and K. And if we have one, we can get the other. So for the C's, I'm going to rely on data provided on his website by Aswath Damodaran. And I urge you to go there and look at that. He has a very thorough website. For P, I'm going to use the current level of the S&P 500, which is about 4,200. So with those C's and the 4,200, I can solve for the risk premium. And it turns out to be 4%. So the question of whether the stock market is too high is really a question of whether the risk premium of 4% is appropriate. And with a risk premium of 4% and a risk-free rate of 1.6%, if we add those together, we get 5.6%. So if you're willing to accept a 5.6% return on the S&P 500, you think the stock market is about right. If you want a higher return, like historical returns have been more on the order of 8 or 9%, then you think the stock market is overpriced and too high. And if you'd be willing to accept less than 5.6, then you could say that the market is in fact too low. So what we've learned in this session is that whether the price P is too high depends on what you think about the risk premium. If the risk premium is 4%, the prices are just right. In the next session, we'll take a little look at the history of the risk premium to cast further light on whether the market is too high. Look forward to seeing you then. This has been Reflections on Investing.